Welcome to Framer Audiobooks, a place where knowledge meets opportunity and where clear thinking becomes a powerful advantage. And we are truly glad to have you with us today as you begin an audiobook created for those who want to understand investing, wealth building, and opportunity from a practical and global perspective. If you are someone who wants to make smarter decisions with money, learn how investors think, and explore how one of the world's most dynamic financial hubs creates growth, then you are in the right place, because this audiobook was designed to guide you step by step with clarity, confidence, and long-term vision. Today's audiobook is titled The Dubai Investor's Guide, and it is built for beginners, professionals, and aspiring investors who want to move beyond guesswork and hype and start understanding how real investors approach markets, risk, and opportunity in Dubai and beyond. Dubai is more than luxury and headlines. It is a carefully structured environment where capital flows, businesses scale, and long-term investment thinking is rewarded. And throughout this audiobook, you will learn how investors identify opportunities, protect their capital, and grow wealth patiently and strategically rather than emotionally. Before we begin, take a moment to support Framer Audiobooks by subscribing to the channel, liking this audiobook, sharing it with someone who wants to grow financially, and leaving a comment to tell us where you are listening from, because your support helps this channel continue delivering valuable, practical knowledge that empowers more people to make informed financial decisions. Before we begin the journey, it is important to understand that this audiobook has been carefully structured into 8 chapters, each designed to build your understanding step by step and guide you towards smarter, more confident investment thinking. Every chapter connects to the next. So by the end of this audiobook, you will not only understand how investors think in Dubai, but how to apply those principles anywhere in the world with clarity and discipline. This chapter introduces the foundation of everything you will learn in this audiobook, because before strategies, markets, or money come into play, successful investing always begins with mindset, perspective, and disciplined thinking. And understanding this will help you avoid costly mistakes while building confidence and direction. In this chapter, you will learn how Dubai-based investors approach opportunity, how they view risk differently from the average person, how they remain patient in fast-moving environments, and why mindset is often the deciding factor between consistent growth and repeated failure. This chapter is important because without the right investor mindset, even the best opportunities can be mismanaged, misunderstood, or missed entirely. The benefit of mastering this mindset early is that it shapes how you evaluate opportunities, protect capital, and make decisions under pressure. It also helps you filter noise, avoid emotional reactions, and focus on long-term value rather than short-term excitement. This chapter sets the tone for the entire audiobook and gives you a mental framework you will rely on repeatedly. By understanding how investors think before you learn what they invest in, you create a strong internal foundation. This mindset will support every strategy you encounter later. It will help you remain consistent when others become reactive. It will allow you to grow steadily instead of chasing quick wins. And most importantly, it will teach you how to think like an investor rather than just someone looking for profit. The Dubai investor mindset begins with understanding that money is a tool for positioning rather than a reward for effort. And successful investors internalize this concept early in their journey. They do not view income as something to spend immediately, but as capital to be allocated intentionally. They understand that wealth is not built through how much you earn, but through how wisely you deploy what you earn. They focus on leverage, scalability, and long-term value creation. They understand that every financial decision has future consequences. They think in terms of years rather than weeks. They avoid emotional spending driven by status or comparison. They recognize that discipline compounds over time. They remain calm during uncertainty. They prioritize learning before acting. They understand that patience is not inactivity, but strategic waiting. They use clarity to reduce stress. They treat money decisions as business decisions rather than emotional reactions. Another core element of the Dubai investor mindset is how risk is understood, evaluated, and managed, because investors who succeed long-term do not eliminate risk, but they control it deliberately. They understand that risk exists in every decision, including doing nothing. They analyze downside before upside. They calculate potential losses before pursuing gains. They avoid risking money they cannot afford to lose. They diversify exposure to avoid dependence on a single outcome. They use structure to reduce uncertainty. They prepare for multiple scenarios. They accept that losses are part of the process. They limit losses quickly rather than hoping for recovery. They understand that survival allows future opportunity. They separate confidence from recklessness. They rely on data rather than emotion. They view risk management as a core skill rather than an afterthought. Dubai investors also think differently about opportunity because they understand that opportunity is not something you wait for, but something you learn to recognize. They pay attention to trends, demand shifts, and unmet needs. They observe how global movements affect local markets. They stay informed without becoming overwhelmed. They analyze why certain sectors grow consistently. They focus on scalability rather than one-time profits. They understand that opportunity often appears during change. They prepare themselves mentally before opportunity arrives. They build skills that increase opportunity visibility. They ask questions instead of making assumptions. They remain curious rather than complacent. They understand that preparation attracts opportunity. They see problems as potential entry points. They understand that opportunity favors those who are ready. Time perspective plays a critical role in the Dubai investor mindset because successful investors value time more than speed and understand that consistency outperforms urgency. They align investments with realistic time horizons. They avoid forcing outcomes prematurely. They allow compounding to work gradually. They remain invested through normal cycles. They understand that volatility is part of growth. They avoid reacting to daily noise. They plan long-term strategies and follow them consistently. They understand that progress is often invisible before it becomes obvious. They focus on systems rather than constant action. They avoid abandoning plans during temporary setbacks. They understand that patience is a competitive advantage. They measure progress over years rather than days. They remain calm while others panic. Capital protection is another defining characteristic of this mindset because Dubai investors understand that protecting money is just as important as growing it. They prioritize preservation alongside returns. They avoid unnecessary exposure. They maintain liquidity for flexibility. They separate investment capital from living expenses. They avoid leverage they do not fully understand. They review positions regularly. They adjust exposure when conditions change. They avoid emotional attachment to assets. They understand that capital lost cannot compound. They focus on longevity rather than excitement. They understand that steady growth outperforms dramatic swings. They use discipline as protection. They understand that control creates freedom. The Dubai investor mindset also emphasizes continuous learning because markets, regulations, and opportunities evolve constantly. Successful investors study economics, business models, and market behavior. They learn from both success and failure. They refine strategies over time. They remain open to new information. They adapt without abandoning principles. They avoid believing they have mastered investing completely. They understand that humility supports growth. They seek credible sources rather than noise. They analyze outcomes objectively. They remain students of the market. They understand that knowledge compounds like capital. They invest in education consistently. They treat learning as a strategic advantage. Finally, this mindset shapes identity because when individuals begin to think like investors, their decisions across life become more intentional and measured. They stop reacting impulsively to circumstances. They plan before acting. They align actions with long-term goals. They understand trade-offs clearly. They prioritize value over appearance. They remain composed during uncertainty. They build confidence through preparation. They avoid chasing validation. They focus on results rather than opinions. They understand that identity drives behavior. They adopt responsibility for outcomes. They think independently. They design their financial future rather than leaving it to chance. By mastering the Dubai investor mindset introduced in this chapter, you create the mental framework that will support every strategy, opportunity, and decision you encounter in the chapters ahead, because without this foundation, even the best information cannot be applied effectively. This mindset will help you navigate complexity with clarity. It will protect you from emotional mistakes. It will strengthen discipline over time. It will improve decision-making under pressure. It will align your actions with long-term objectives. It will help you recognize real opportunities. It will reduce unnecessary risk. It will increase confidence through understanding. It will support consistent growth. It will transform how you view money. It will prepare you for the practical strategies that follow. And it will ensure that as you continue through this audio, you are thinking like an investor, not just listening like one. This chapter is important because even the strongest investor mindset needs the right environment to translate intention into results. And Dubai provides a unique ecosystem where structure, policy, and ambition work together to accelerate growth. In this chapter, you will understand why global investors choose Dubai, how its systems reduce friction for capital, and why opportunity here moves faster than in many traditional markets. You will learn how environment influences decision-making, risk, and scalability. You will discover why investors are drawn not only to profit potential but to predictability and clarity. You will see how infrastructure supports execution. You will understand how regulation shapes confidence. You will learn why global connectivity matters for investment growth. You will recognize how policy direction affects opportunity flow. You will gain insight into why capital prefers certain environments. You will learn how to position yourself within such an ecosystem. And by the end of this chapter, you will understand why location can multiply effort when aligned correctly. Dubai's rise as a global investment hub is the result of long-term vision rather than accidental success. Because leadership prioritized economic diversification, stability, and global relevance decades in advance. The city was designed to attract capital rather than repel it. Infrastructure was built to support trade, finance, and logistics at scale. Policies were created to encourage foreign participation. Regulatory clarity reduced uncertainty for investors. Strategic planning ensured continuity across economic cycles. Speed of execution became a defining advantage. Innovation was embedded into development. Long-term goals guided short-term decisions. Stability created confidence for capital deployment. Growth was planned rather than reactive. Opportunity was engineered through structure. Vision translated into an ecosystem that rewards preparation. Geographic positioning plays a major role in Dubai's investment appeal because it connects Asia, Europe, and Africa within a single operational base. Investors can access multiple markets efficiently. Businesses can operate across time zones with minimal friction. Trade routes naturally converge in the region. Logistics infrastructure supports global movement. Supply chains benefit from reduced transit complexity. International travel is streamlined through major hubs. Capital flows more efficiently across borders. Market reach expands without relocation. Operational scalability increases significantly. Global exposure becomes accessible. Time becomes a competitive advantage. Location transforms possibility into practicality. Regulatory structure further strengthens Dubai's position, because clear rules reduce uncertainty and encourage long-term planning rather than speculation. Business setup processes are transparent and efficient. Licensing systems are designed for speed. Legal frameworks protect investors and ownership. Free zones support specialized industries. Tax efficiency improves retained earnings. Policy updates adapt to global trends. Compliance is structured rather than confusing. Regulation supports innovation rather than restriction. Investor confidence increases through predictability. Risk becomes measurable rather than unknown. Long-term planning becomes viable. Regulation becomes a foundation rather than an obstacle. Cultural diversity also contributes significantly to Dubai's investment environment, because global perspectives increase opportunity, awareness, and innovation. Investors gain exposure to international consumer behavior. Businesses can test ideas across cultures. Talent pools are diverse and skilled. Collaboration across industries is natural. Networks form organically across borders. Innovation benefits from cross-cultural insight. Market understanding deepens through diversity. Global standards influence execution quality. Adaptability becomes a norm. Competition improves performance. Learning accelerates through exposure. Diversity becomes an advantage rather than complexity. Dubai's growth-oriented mindset further amplifies opportunity because ambition is supported rather than discouraged by the surrounding environment. Large-scale projects inspire bold thinking. Innovation is celebrated publicly. Risk-taking is supported by structure. Progress is expected rather than questioned. Development is continuous rather than static. Change is embraced rather than feared. Markets remain dynamic. Opportunity evolves constantly. Capital follows momentum. Investors are encouraged to think big. Execution is valued highly. Growth aligns with vision. Investor confidence in Dubai is reinforced by political and economic stability because long-term capital prefers predictability over chaos. Stability allows planning beyond short-term cycles. Confidence encourages reinvestment. Risk becomes manageable. Capital preservation improves. Institutions operate reliably. Policy continuity supports long-term strategy. Investors avoid sudden disruption. Market trust increases participation. Growth becomes sustainable. Volatility is reduced. Opportunity becomes repeatable. Stability strengthens commitment. Ultimately, Dubai is a global investment hub because it combines vision, structure, location, regulation, and ambition into a single ecosystem that multiplies investor effort. Opportunity becomes visible to prepared individuals. Capital moves efficiently. Risk is structured. Growth accelerates naturally. Learning compounds quickly. Networks expand opportunity. Systems support execution. Scale becomes achievable. Environment amplifies discipline. Strategy becomes effective. Potential becomes reality. Dubai becomes a platform, not just a place. Now that you understand why Dubai attracts global capital and opportunity, the next step is learning how investors actually deploy money within this environment to build sustainable wealth. In the next chapter, we will explore the specific investment pathways that successful investors use to grow and protect capital over the long term. This chapter matters because opportunity alone does not build wealth unless capital is placed into the right pathways with discipline and structure. In this chapter, you will learn how investors choose where to put their money. You will understand what separates strategic investing from speculation. You will learn how different asset classes behave. You will understand why patience is essential. You will learn how risk is balanced against return. You will discover why diversification matters. You will see how capital grows over time. You will learn how investors avoid common traps. You will understand how alignment with goals shapes decisions. You will learn how to think in systems rather than isolated investments. You will gain clarity on sustainable wealth building, and by the end of this chapter you will understand how capital is turned into a long-term engine for growth. Real estate remains one of the most important investment pathways in Dubai because it is supported by population growth, infrastructure development, and long-term demand. Investors study location before appearance. They evaluate yield alongside appreciation. They analyze supply cycles carefully. They understand rental demand dynamics. They avoid over-leveraging. They plan for long-term ownership. They reinvest cash flow strategically. They consider regulation and ownership structure. They focus on stability rather than speculation. They align property investment with broader goals. They understand that real estate rewards patience. They treat property as part of a portfolio, not a shortcut. Business equity is another powerful pathway because ownership allows investors to participate directly in value creation and scalability. Investors evaluate business models carefully. They analyze revenue sustainability. They assess management quality. They understand cost structures. They evaluate competitive advantage. They consider scalability potential. They diversify equity exposure. They accept that not all ventures succeed. They manage position size carefully. They remain involved strategically. They understand equity requires patience. They focus on long-term value rather than quick exits. Financial markets also provide structured pathways when approached with education and discipline rather than emotion. Investors understand asset class behavior. They diversify across instruments. They align exposure with time horizon. They avoid excessive trading. They manage volatility through allocation. They reinvest returns consistently. They understand inflation risk. They avoid reacting to news cycles. They review portfolios periodically. They maintain long-term strategies. They understand market cycles. They prioritize process over prediction. Risk management is central to every successful investment pathway because capital preservation ensures future participation. Investors assess downside before upside. They diversify exposure. They maintain liquidity. They avoid concentration risk. They use leverage cautiously. They define exit strategies. They accept small losses early. They avoid investing emotional capital. They separate living expenses from investments. They plan for uncertainty. They build buffers intentionally. They understand that survival enables compounding. Time plays a crucial role in wealth-building pathways because compounding requires consistency rather than intensity. Investors allow strategies to mature. They avoid constant changes. They remain patient through cycles. They trust structured plans. They understand growth is not linear. They focus on long-term outcomes. They avoid abandoning strategies prematurely. They remain disciplined during volatility. They measure progress realistically. They understand time multiplies effort. They allow learning to compound. They respect delayed results. Successful investors also understand alignment. Because investments must match personal goals, risk tolerance, and lifestyle, they define objectives clearly. They avoid copying others blindly. They choose pathways they understand. They align strategies with income stability. They balance growth and security. They adjust exposure as life evolves. They review alignment periodically. They understand flexibility matters. They avoid overcomplexity. They prioritize clarity. They maintain consistency. They design portfolios intentionally. Ultimately, investment pathways that build wealth are defined by discipline, patience, and structure rather than excitement or speed. Wealth grows through alignment. Capital compounds through time. Risk is managed deliberately. Strategy guides allocation. Learning improves outcomes. Consistency outperforms urgency. Systems replace guesswork. Decisions become intentional. Growth becomes sustainable. Confidence replaces anxiety. Opportunity becomes repeatable. And when capital is deployed wisely, wealth becomes a predictable outcome rather than a hopeful one. This chapter is essential because investing without strategy often leads to unnecessary losses, confusion, and emotional decision-making, while strategic investing creates clarity, protection, and sustainable growth over time. In this chapter, you will learn how experienced investors in Dubai think beyond basic buying and selling. You will understand how strategy shapes every investment decision. You will discover why protecting capital is prioritized before chasing returns. You will learn how investors position themselves across cycles. You will understand the importance of structure and rules. You will see how discipline reduces stress and mistakes. You will learn how strategy replaces emotion. You will understand why consistency outperforms intensity. You will gain insight into how professional investors manage uncertainty. You will learn how patience becomes an advantage. You will understand how strategic investing supports long-term wealth. And by the end of this chapter, you will see investing as a system rather than a series of guesses. Strategic investors in Dubai begin by defining clear objectives before committing capital. Because without defined goals, it becomes impossible to measure progress or success accurately. They determine whether an investment is for income, growth, or preservation. They align strategy with time horizon. They assess risk tolerance honestly. They avoid mixing short-term and long-term goals. They design rules before entering markets. They understand that clarity prevents emotional reactions. They avoid reacting to daily market noise. They focus on process rather than outcomes. They remain disciplined during volatility. They understand that objectives guide decision-making. They revisit goals periodically. They understand that strategy begins with intention. Capital protection is central to strategic investing. because money that is lost cannot participate in future opportunities. Investors define acceptable loss levels in advance. They diversify to reduce exposure. They avoid concentrating capital in a single idea. They manage leverage cautiously. They maintain liquidity for flexibility. They separate investment capital from personal funds. They avoid chasing losses. They understand that preservation enables compounding. They reduce downside before seeking upside. They use structure to limit emotional damage. They accept small losses strategically. They understand that survival is success. Strategic investors also understand market cycles, because timing matters less than positioning across different phases. They recognize expansion and contraction phases. They adjust exposure accordingly. They avoid overconfidence during growth periods. They remain cautious during uncertainty. They understand that markets move in cycles. They avoid assuming trends last forever. They rebalance portfolios when necessary. They remain patient during consolidation. They avoid panic selling. They understand volatility is normal. They focus on long-term trends. They allow cycles to work in their favor. Diversification is another core element of strategic investing because spreading exposure reduces reliance on any single outcome. Investors diversify across asset classes. They diversify across sectors. They diversify across time horizons. They avoid overexposure to correlated assets. They understand diversification reduces volatility. They accept that not all assets perform equally at once. They balance growth and stability. They avoid chasing the best performer. They understand diversification protects mental clarity. They review allocation periodically. They adjust as conditions change. They understand diversification supports longevity. Discipline separates strategic investors from reactive ones because consistent execution produces predictable outcomes over time. Investors follow predefined rules. They avoid impulsive decisions. They document strategies clearly. They track performance objectively. They review mistakes without emotion. They adjust strategies based on evidence. They remain consistent during drawdowns. They avoid strategy hopping. They focus on improvement rather than perfection. They understand discipline builds confidence. They accept boredom as part of success. They value consistency over excitement. Ultimately, strategic investing in Dubai is about combining clarity, discipline, and structure to allow capital to grow while remaining protected. It begins with intention. It develops through rules. It strengthens through risk management. It adapts through cycles. It survives through diversification. It rewards patience. It reduces emotional stress. It creates predictability. It supports long-term goals. It turns investing into a repeatable process. It aligns capital with purpose. And when strategy leads investing, wealth becomes sustainable rather than fragile. Now that you understand how investors deploy capital strategically, the next step is learning how opportunity itself is transformed into sustainable growth through structure and execution. In the next chapter, we will explore how successful individuals turn opportunity into systems that scale consistently over time. This chapter is critical because opportunity without structure often leads to chaos, inconsistency, and burnout, while structured growth transforms potential into predictable results. In this chapter, you will learn how successful individuals in Dubai build systems around opportunity. You will understand why structure is more important than speed. You will learn how growth is planned rather than forced. You will discover how systems replace guesswork. You will understand how structure protects momentum. You will learn why discipline sustains expansion. You will see how clarity reduces complexity. You will understand the role of planning in scalability. You will learn how structure creates freedom rather than restriction. You will understand why many opportunities fail without systems. You will gain insight into long-term execution. And by the end of this chapter, you will understand how growth becomes repeatable. Structured growth begins with clear planning, because growth without direction leads to wasted resources and unstable outcomes. Successful individuals define measurable objectives. They break long-term goals into phases. They align actions with capacity. They avoid expanding faster than systems allow. They understand that planning reduces risk. They establish milestones for evaluation. They track progress objectively. They adjust plans as data changes. They avoid reacting impulsively. They remain flexible without losing focus. They understand planning supports confidence. They use structure to guide decisions. Financial structure is essential to growth, because unmanaged cash flow can undermine even profitable opportunities. Individuals separate personal and business finances. They track revenue and expenses consistently. They plan budgets aligned with growth stages. They forecast cash needs in advance. They maintain financial reserves. They manage expenses intentionally. They avoid over-leveraging. They reinvest profits strategically. They monitor profitability regularly. They understand cash flow timing. They use financial data for decisions. They treat discipline as protection. Operational systems allow opportunity to scale without chaos, because repeatable processes reduce dependency on constant oversight. Entrepreneurs document workflows early. They standardize key processes. They define roles clearly. They invest in training. They use tools to improve efficiency. They track performance metrics. They identify bottlenecks proactively. They refine systems continuously. They prepare for increased demand. They avoid improvisation during growth. They understand systems enable scalability. They view operations as strategic assets. Decision-making becomes more effective when structure is in place. Because systems reduce emotional influence and increase consistency, leaders evaluate opportunities objectively. They use data rather than assumptions. They prioritize initiatives with highest impact. They understand opportunity cost. They sequence growth logically. They avoid pursuing everything at once. They allocate resources deliberately. They say no to distractions. They focus on alignment with long-term goals. They understand clarity improves speed. They avoid reactive decisions. They treat strategy as ongoing. People and leadership are central to structured growth because systems are executed by individuals, not ideas alone. Leaders invest in talent development. They delegate responsibility effectively. They build accountability structures. They communicate expectations clearly. They align incentives with performance. They develop leadership capacity early. They avoid micromanagement. They create cultures of ownership. They address issues directly. They support continuous improvement. They understand people's scale systems. They value leadership as leverage. Ultimately, turning opportunity into structured growth requires discipline, patience, and intentional design, because sustainable success is built through systems rather than bursts of effort. Structure creates stability. Planning supports scalability. Discipline maintains momentum. Systems reduce stress. Leadership multiplies impact. Growth becomes predictable. Opportunity becomes manageable. Execution becomes consistent. Results become repeatable. Progress becomes measurable. Success becomes sustainable. And when structure supports opportunity, long-term growth becomes inevitable rather than uncertain. Now that you understand how opportunity is transformed into structured and scalable growth, the next step is learning how investors manage risk, uncertainty, and decision-making over long periods of time. In the next chapter, we will explore how long-term investors in Dubai protect themselves, stay consistent, and remain profitable through changing market conditions. This chapter is essential because wealth is not built by avoiding risk entirely, but by managing it intelligently over time so that growth can continue without catastrophic setbacks. In this chapter, you will learn how long-term investors think about risk differently. This chapter is essential because wealth is not built by avoiding risk entirely, but by managing it intelligently over time so that growth can continue without catastrophic setbacks. In this chapter, you will learn how long-term investors think about risk differently. You will understand why discipline is more important than intelligence. You will discover how longevity creates advantage. You will learn how investors survive downturns. You will understand how emotional control protects capital. You will learn why most people fail due to inconsistency. You will discover how rules replace impulse. You will understand how patience reduces mistakes. You will learn how investors stay calm under pressure. You will see why staying in the game matters more than winning quickly. You will understand how longevity compounds results. And by the end of this chapter, you will see risk as something to manage rather than fear. Successful investors understand that risk is unavoidable, but unmanaged risk is optional, which is why they design systems to limit damage before seeking reward. They define acceptable loss levels clearly. They avoid risking capital needed for daily life. They diversify exposure deliberately. They understand that concentration increases vulnerability. They assess downside scenarios realistically. They prepare for uncertainty rather than hoping it will not happen. They remain conservative during periods of excessive optimism. They reduce exposure when conditions become unstable. They understand that protection enables participation. They view risk management as proactive rather than reactive. They accept small losses to avoid large ones. They understand that survival is the foundation of success. Discipline is the backbone of longevity, because without it, even good strategies fail under emotional pressure. Investors follow predefined rules consistently. They avoid impulsive decisions driven by fear or greed. They document strategies clearly. They track performance objectively. They review decisions honestly. They resist the urge to chase trends. They remain consistent during volatility. They avoid strategy hopping. They understand boredom is often a sign of discipline. They focus on execution rather than excitement. They accept that discipline feels restrictive but creates freedom. They understand consistency outperforms intensity. Long-term investors also understand that markets move in cycles, and adapting without abandoning principles is critical to longevity. They recognize expansion and contraction phases. They adjust exposure gradually. They avoid overconfidence during growth periods. They remain patient during downturns. They understand that cycles repeat. They avoid assuming current conditions are permanent. They rebalance portfolios strategically. They maintain perspective during volatility. They understand timing. Perfection is impossible. They focus on positioning rather than prediction. They remain flexible without becoming reactive. They allow time to smooth outcomes. Psychology plays a major role in risk and longevity, because emotional decisions often cause more damage than market movement itself. Investors learn to manage fear consciously. They recognize greed early. They detach identity from outcomes. They avoid revenge decisions. They remain calm under pressure. They use rules to limit emotional interference. They understand that stress reduces decision quality. They prioritize mental clarity. They avoid overexposure that increases anxiety. They maintain balance outside investing. They understand psychology compounds over time. They treat emotional control as a skill. Capital allocation also affects longevity, because improper sizing can end an investing journey prematurely. Investors allocate capital based on risk tolerance. They avoid oversized positions. They scale exposure gradually. They understand leverage magnifies outcomes. They use leverage cautiously, if at all. They maintain liquidity. They plan for unexpected events. They understand that flexibility is a form of protection. They avoid committing all resources at once. They keep options open. They understand that capital structure determines survival. They treat allocation as strategic design. Ultimately, risk management and discipline are what allow investors to remain active long enough for compounding to work. Longevity multiplies learning. Experience improves judgment. Survival creates opportunity. Consistency builds confidence. Structure reduces stress. Patience protects capital. Discipline supports growth. Adaptability preserves relevance. Emotional control prevents collapse. Time rewards preparation. Staying in the game matters most. And when longevity is prioritized, wealth becomes sustainable rather than fragile. Now that you understand how risk, discipline, and longevity protect growth, the next step is learning how income streams are created, diversified, and stabilized over time. In the next chapter, we will explore how successful investors and entrepreneurs build multiple streams of income that support long-term financial freedom. This chapter is important because relying on a single source of income increases vulnerability, while multiple income streams create resilience and flexibility. This chapter, you will learn why diversification applies to income as much as investments. You will understand how investors build layered income. You will learn how stability reduces stress. You will discover how flexibility increases opportunity. You will understand why income diversification supports long-term freedom. You will learn how systems generate income. You will see how income streams evolve over time. You will understand the difference between active and passive income. You will learn how to align income with lifestyle. You will understand why most wealthy individuals diversify income. And by the end of this chapter, you will understand how income becomes a system rather than a struggle. Successful individuals begin by stabilizing their primary income before expanding into additional streams. Because stability provides the foundation for experimentation, they ensure core income is reliable. They manage expenses responsibly. They avoid overextending too early. They understand timing matters. They reinvest surplus income. They build reserves for flexibility. They reduce dependency gradually. They avoid abandoning stability prematurely. They understand that foundations support expansion. They plan income diversification strategically. They align growth with capacity. They understand that stability creates confidence. Additional income streams are built through investments, businesses, and skills that scale beyond time for money exchange. Investors develop income-producing assets. They invest in dividend or yield-generating opportunities. They build businesses with recurring revenue. They monetize skills strategically. They create systems that operate independently. They avoid income streams that require constant supervision. They prioritize scalability. They reinvest earnings to accelerate growth. They test ideas before scaling. They diversify income sources gradually. They understand not all streams grow equally. They manage complexity carefully. Income diversification also reduces psychological pressure, because financial stress often leads to poor decisions. Multiple streams provide backup options. They reduce fear of loss. They improve negotiation power. They increase confidence during uncertainty. They allow longer-term thinking. They reduce urgency-driven mistakes. They provide flexibility during transitions. They support calculated risk-taking. They protect lifestyle stability. They improve emotional resilience. They allow strategic patience. They support sustainable growth. Successful individuals align income streams with lifestyle goals, because income that creates burnout undermines freedom. They consider time commitment. They assess stress impact. They design income to support desired lifestyle. They avoid sacrificing health for earnings. They plan for location flexibility. They value time as much as money. They prioritize sustainability. They adjust streams as life evolves. They avoid overcomplication. They simplify when necessary. They understand freedom includes balance. They align income with purpose. Management becomes important as income streams increase, because complexity can erode clarity without structure. Individuals track income sources carefully. They manage cash flow intentionally. They separate streams financially. They monitor performance regularly. They discontinue underperforming streams. They automate where possible. They document systems. They maintain oversight without micromanagement. They prioritize clarity. They review alignment periodically. They understand simplicity scales better. They treat income as a portfolio. Ultimately, building multiple income streams creates stability, flexibility, and long-term independence when done intentionally. Diversification reduces vulnerability. Systems replace stress. Income becomes predictable. Flexibility increases options. Stability supports growth. Confidence improves decisions. Opportunity expands naturally. Time freedom increases. Risk becomes manageable. Wealth becomes resilient. Financial independence becomes achievable. And when income works as a system, freedom becomes sustainable. Now that you understand how income is built and stabilized, the final step is bringing everything together into a clear personal framework you can follow over time. In the final chapter, we will focus on integrating mindset, strategy, income, and discipline into a complete long-term investment blueprint. This final chapter is important because knowledge without integration remains fragmented, while a clear blueprint turns understanding into consistent action. In this chapter, you will learn how to combine mindset, environment, strategy, and execution. You will understand how investors create personal frameworks. You will learn why alignment matters more than complexity. You will see how consistency replaces confusion. You will understand how long-term plans evolve. You will learn how to adapt without losing direction. You will discover how clarity reduces overwhelm. You will understand how systems support discipline. You will learn how to measure progress realistically. You will understand why reflection improves results. You will learn how to stay aligned with goals. And by the end of this chapter, you will have a framework you can apply confidently. A strong investor blueprint begins with clarity of vision, because direction determines every decision that follows. Investors define long-term objectives clearly. They understand personal motivations. They align financial goals with values. They avoid copying others blindly. They set realistic timelines. They understand trade-offs. They commit to consistency. They revisit vision periodically. They adjust goals as experience grows. They maintain focus during distraction. They understand clarity reduces stress. They treat vision as a living guide. Strategy forms the structure of the blueprint because without strategy, action becomes reactive rather than intentional. Investors choose investment pathways deliberately. They align strategies with risk tolerance. They define rules for execution. They design asset allocation intentionally. They understand strategy reduces emotional interference. They avoid improvisation. They review strategies regularly. They refine approaches over time. They adapt to changing conditions. They avoid overcomplexity. They understand strategy provides stability. They treat strategy as a discipline. Execution brings the blueprint to life, because plans without action remain theoretical. Investors follow systems consistently. They track progress objectively. They measure outcomes realistically. They review performance regularly. They correct mistakes early. They remain disciplined under pressure. They avoid emotional deviation. They maintain accountability. They build habits that support execution. They understand action compounds over time. They prioritize consistency over intensity. They treat execution as practice. Income, investing, and business activities are integrated within the blueprint to support long-term sustainability rather than short-term gains. Investors align income with lifestyle. They balance growth and stability. They reinvest strategically. They manage risk holistically. They maintain liquidity. They diversify exposure. They plan for uncertainty. They adjust allocation over time. They avoid overextension. They prioritize longevity. They understand integration reduces friction. They treat wealth as a system. Reflection and adaptation strengthen the blueprint over time because learning accelerates improvement. Investors review decisions honestly. They analyze outcomes objectively. They learn from mistakes. They refine strategies based on experience. They remain flexible without losing direction. They adapt to market changes. They update goals as life evolves. They avoid rigidity. They remain open to improvement. They understand growth as iterative. They value reflection as progress. They treat adaptation as strength. Ultimately, the Dubai Investor's Blueprint is about alignment, discipline, and consistency applied over time. Because sustainable success is built through intentional systems rather than isolated decisions. Vision provides direction. Strategy creates structure. Execution delivers results. Discipline protects progress. Adaptability preserves relevance. Time compounds effort. Clarity reduces stress. Systems replace guesswork. Growth becomes predictable. Confidence replaces uncertainty. Wealth becomes intentional. And when this blueprint is followed consistently, long-term success becomes not a possibility, but an expectation. Throughout the Dubai Investor's Guide, you have explored how successful investors think, how Dubai's unique environment accelerates opportunity, how capital is deployed strategically, how businesses and income streams are built and scaled, how risk is managed for longevity, and how all of these elements come together into a clear and practical investor blueprint. You have learned that wealth is not created through shortcuts or hype, but through clarity, discipline, structure, and long-term thinking. You now understand why mindset shapes outcomes, why environment matters, why strategy protects capital, and why consistency outperforms urgency. This audiobook has shown you that financial success is a process, not an event, and that progress is built one decision at a time. You have gained frameworks you can adapt to your own goals and lifestyle. You have learned how to think like an investor rather than react like a spectator. And most importantly, you now have the awareness needed to make smarter, more confident financial decisions. As you move forward, remember that knowledge becomes valuable only when it is put into action. So start where you are, stay patient, and commit to steady progress rather than perfection. Revisit your vision regularly and refine it as you grow. Apply structure to your finances and investments. Continue learning and questioning. Manage risk with discipline. Build systems that support long-term growth. Adjust your strategies as life evolves, but stay aligned with your goals. Consistency may feel slow at times, but it compounds quietly and powerfully. Every informed decision strengthens your position. Every disciplined action builds confidence. Every step taken with clarity moves you closer to long-term financial freedom. If this audiobook has added value to your thinking and helped you see investing more clearly, we invite you to support Freema Audiobooks by subscribing to the channel so you never miss future audiobooks focused on wealth, investing, mindset, and opportunity. Please like this audiobook to help it reach more people who are searching for clear and practical financial knowledge. Share it with friends, family, or colleagues who would benefit from learning how investors really think. And leave a comment to tell us where you are listening from or which insight resonated with you the most, because your engagement helps this channel grow and allows us to continue creating high-quality content designed to educate, empower, and inspire. Thank you for listening to Freema Audiobooks, where knowledge becomes strategy and learning becomes opportunity. And remember that your financial future is shaped not by chance, but by the choices you commit to making from this moment forward.